So, class, hello. Right after we have learned all the elements of financial statements and together with the line items under each category or under assets, liabilities, equity or capital, income, and expenses, we're now going to proceed with the double entry system method in the recording phase of accounting. So, again, accounting is defined as the art of recording, classifying, summarizing, and interpreting, diba? So, we are now on the first part of uh, the accounting process, which is yung recording business transactions. But before we proceed to the recording of business transaction, it is important for us to know and to understand the concept of the double entry system method. Okay, so recording transactions in accounting is based on the double entry system. The transaction has a dual effect, which means that every transaction affects at least two accounts. So, meaning to say, for every debit, there is a corresponding credit. For example, you purchase supplies from your supplier. When you purchase supplies and you paid cash to your suppliers, there are at least two account titles affected in that transactions. Namely the cash and supplies. When you purchase supplies, supplies will go to your business and cash in return will go out from your business. Okay? So for a clearer understanding, let's first define what an accounting cycle is. So accounting cycle consists of the uniform procedures done during the recording process of business transactions. We have here 8 steps in the accounting cycle. First, we must identify and analyze the events to be recorded. In analyzing business transactions, it's important for us to identify whether such transaction involves cash or any financial in nature. Because class, in the first place, when such business transaction do not have an impact to assets, liabilities, equity, income, and expenses, then we're going to ignore such business transaction. What we are going to record are those transactions which are financial in nature or which involves cash or any non-cash assets or properties which are measurable. Okay? So before we proceed to step number 2, we're going to analyze first the business transactions if uh, we're going to record it in our journal or not. Okay. Then step number 2, recording transactions in the journal. Take note that journal is also called as the book of original entry because accountants are using journal sheets or journals in recording business transactions. Okay. The number 3, right after we have recorded all the business transactions in our journal, that's the time that we need to post each transaction or each account title to their corresponding T accounts or ledger. Right after the recording phase, we're going to proceed with the classification or classifying phase, wherein all similar items are grouped. Then number 4, we're going to prepare a preliminary trial balance. It is called a preliminary trial balance because there are no adjustments made to it yet. Then right after having the preliminary trial balance, we're going to prepare the worksheet and the adjusting entries. At the end of the period, there are some uh, instances or uh, what we call this one, there are some necessary adjustments to be made on our previous records. Since we are using accrual principle and recording business transactions, meaning to say we record income when we earn them and we record expense when we incurred them, then at the end of the period, there will be some requirements which will which we need to follow or which we need to comply. For example, if we record an asset, then at the end of the period, such asset or assets are all consumed or some portion of it has already expired, then we need to transfer some amount from our asset account going to an expense account. Okay, or maybe we at the beginning of the year we record a cash receipt as a liability, but as time or as months passed by, I mean, uh, some portion of our liability will be transferred to our income account because of the reason that as months passed by or as time passed by, our company may have already rendered uh, our services to our clients, and when we render services to our clients, that's the time that we are earning it or we are earning income. Okay, so when we earn income, we need to recognize income accounts or we need to record it to our revenue or income accounts. So from our liability, we're going to transfer to uh, our income accounts. Okay. So anyways, adjustments or preparation of adjusting entries. We're going to discuss uh, that topic in detail. Okay. So right after you have learned how to journalize business transactions, how to post to ledger or T accounts, and how to prepare a preliminary trial balance. So right after understanding and learning how to prepare an adjusted trial balance, I'm going to introduce you to adjusting entries topics. Then right after preparing the worksheet, we can now prepare all the financial or all the basic types of financial statements which we have discussed on our previous meetings. Okay. So again, we have five types of financial statements, namely statement of financial position or a balance sheet or statement of okay, yun na yun. And then second one, statement of comprehensive income or income statement or statement of financial performance. Then number three, we have statement of changes in equity. Number four, we have cash flow statements. And number five, we have notes to financial statements. Then number seven, we have to journalize and post all the adjusting entries that we have prepared in number five. We're going to post them to their corresponding T accounts then or ledger. Then number eight, journalizing and posting of closing journal entries. Class, at the end of the accounting cycle, we need to close all the nominal accounts, right? So we need to prepare closing entries and close them to income summary and to capital accounts. Then, uh, right after an accounting, right after we finished a one whole accounting cycle, another one begins or another accounting period will begin. Okay. Next is, yan. What is a journal? As I have mentioned earlier, the journal is also called the book of original entry because we first record our business transactions, we record them first to a journal. Okay, so the journal is a chronological record of events or business transactions showing all the effects of each transaction in terms of debits and credits. So because transactions are initially recorded in the journal, it is called the book of original entry. So again, we're going to record all the business transactions initially at our or in the journal. Okay. So a journal entry should contain the following: date, account titles and explanation, P.R, short uh, abbreviation for posting reference, then of course the debit and the credit column. So here it what a journal looks like. Okay. So presume that Mr. X established X company with an initial investment of 300,000 on May 2, 2017. So the journal entry should be, first we're going to write the date on the date column, which is May 2, 2017. Then we're going to on the second column, we're going to write the account titles and explanations. So in this transaction, we identified that two accounts or the two account titles affected, which are cash and X capital. So the rules of debits and credits will be discussed in a separate lecture. So uh, right after writing the account titles affected in this column, we record also the explanation. So the account titles and explanations will these are the account titles, okay? So the explanations will remind us what the business transaction is all about. Okay, for example, to record the initial investment of Mr. X to the business. So we just need to write a short phrase or one complete sentence for our explanation, but we don't need to write it in a paragraph form. What we need to have in our explanation is something that will remind us what the business transaction is all about. Okay, then right after filling up the second column, we're going to uh, record the amount involved, which is in this case the 300,000 pesos. So for every debit, there must be a corresponding credit under the double entry system method. So we always need to check the balances of our debits and credits. So the total of your debit must always be equal to the total of your credit. Okay. If there's a case wherein your debits exceed your credit, so there must be something wrong in your recording process or vice versa. Okay. So we have here simple entry and compound entry. Class, when only two accounts are affected, we record it or we called it as a simple entry. For example, in this case, this is just a simple entry because this involves only two account titles. But in cases where more than two account titles are affected, we called it compound entry. For example, at least three account titles are affected, or at least three accounts are shown or presented in your journal. Okay, so that is called compound entry. An example of a simple entry: if the owner pays 6,000 for the supplies he bought, the journal entry requires a simple entry only. Because when we pay 6,000 cash to the supplier for the supplies that we purchase or we acquire, the account titles affected are only cash and supplies. Okay, the supplies account is debited and the cash is credited in the amount of 6,000 pesos. So there are only two accounts affected, supplies and cash. That's why it is called simple entry. But okay, here's another example showing a compound entry. Class, when there are at least three accounts affected, we need to prepare a compound entry. So if the owner purchased equipment worth 100,000 pesos and the term is 20% down payment and the balance on account, this requires a compound entry. Upon analyzing this business transaction, we have three account titles affected, namely the equipment, uh, the cash for the down payment, the cash that we are going to pay to our seller, and the balance on account, which means that the remaining balance will be recorded as a liability or as a payable. So class, there are three account titles affected in this transaction: equipment, cash, and accounts payable. Okay, so upon making a journal entry for this transaction, we're going to debit equipment, we're going to credit cash, and we're going to credit accounts payable. We record equipment using the historical cost or the acquisition cost, which in this case is yung 100,000. We credit cash for 20%, which is yung 20K, and the remaining balance, naku, nabak ko. Ano ba yan? Sorry. So, nawala. And the remaining balance for 80,000 that amount will be credited to your accounts payable. Okay. Next, yan. Let's now proceed to journalizing the transactions or to the preparation of journal entries as the number 2 steps in our accounting or the number 2 step, no ba ma'am, in the accounting cycle. So, journalizing is the process of recording a transaction in the journal after it has been recognized and measured. Again, if a business transaction do not involve or does not involve financial or money or anything that is measurable. If it is non-measurable, then ignore it, okay? But if it contains or if it involves financial, if it has a financial involvement, it can be measured, then we're going to record such business transaction to the journal. Okay? So again, journal should be chronologically arranged because it is important that the presentation of our business records are according to the dates that we have uh, incurred them. Okay. So journalizing again is the process of recording a transaction in the journal after it has been recognized and measured. So here are the rules for debit and credit. So you debit to show increase in assets, decrease in liabilities, decrease in owner's equity. Class, take note of what I have, of the imaginary tattoos that I have taught you. For example, sorry for the, the drawing. For example, this is your, gandahan nga natin. For example, these are your fingers. Mas maganda pa yung kanina. Ulit. Yain na. So, for example, these are your 5 fingers. Okay? So, we have here your assets, liabilities, equity or capital, income, and expenses. Okay? So, take note that your assets and and expenses, mali, mali, have a debit as their normal balances. Then the rest, yung kabaliktaran po ng debit, which is yung credit. The liabilities, equity, and income, they all have credits as their normal balances. Okay? So, class, the rule is, you're going to follow their normal balances if in your analysis of business transactions, such accounts increase in value. Okay? But you're going to follow the opposite side or the opposite balance or the reverse balance if in your analysis of such business transaction, you find out or you have learned that such account title decrease in value. For example, if we purchase if we purchase supplies using cash, then the two account titles affected are supplies and cash. Okay? In our analysis, supplies will be increased and cash will be decreased. So both account titles are assets. Okay? So the normal balance of assets or of asset is debit. So the supplies will be debited because in our analysis it will be increased, right? Then the cash will be credited because in our analysis cash will be decreased as cash will be going out from our business. Diba? We're going to pay cash to our supplier. That's why cash will be decreased. The level of cash in our business will be decreased. Okay, so that's how the rules of debits and credits go. Okay, or work. So, for example, liabilities, equity, and income. For example, class, we purchase supplies on account. So, on account means there are no cash involved in the transaction. So, when we purchase supplies on account, there are at least two account titles or there are actually two account titles affected, namely the supplies and accounts payable. Supplies is an asset account, while accounts payable is a liability account. Supplies will increase as well as accounts payable will also increase. So, supplies will be debited. Asset po siya eh. And assets have a debit balance, a debit normal balance. So, i-increase siya, follow the normal balance. Then, accounts payable will also increase. Accounts payable is a liability, and take note, accounts payable is, or a liability has a credit normal balance. Therefore, we're going to credit accounts payable. So anyways, we are still going to discuss them in detail for in the next slides of this presentation. Okay. So you credit to show decrease in assets, increase in liabilities, increase in owner's equity, initial, additional, and revenue or income. I suggest that you follow the imaginary tattoo rules for the rules for debit and credit. Okay. So, illustrations. Mr. X loves to paint. He decided to open a world gallery. He started up with 300,000 initial capital investment on January 3, 2017. So, class, if we're going to prepare a journal entry, first, let's fill up on the date column. So, this is January 3, 2017. He decided to open a world gallery with an initial investment of 300,000. Class, take note that if the transaction is an investment type of transaction, this will increase the capital amount of the owner. And this will also increase the assets, the asset account of the owner, depending on what type of asset did he invest in the company. So, his company is named the World Gallery. Okay. So, he invested 300,000 cash in the business. So, in this illustration, cash will be debited since this is what Mr. X invested in the business. Then, let's just write X capital credit. Okay. So, class, take note that uh, credits are always written, uh, are always indented. Okay? Hindi mo po siya itatapat or ipapantay sa nakadebit mo. Pag pinantay mo yan sa nakadebit mo, mamalian kita. Okay? Taray mo naman, ma'am. Okay, then we're going to write the amount of the investment. So, 300,000 pesos. 300,000 pesos. Then, for the explanation, to record the initial investment by Mr. X, or eto, may nakaprepare naman ako dyan eh. So, yan. To record the initial investment of Mr. X to the business. So, pinakita ko lang kung paano ko siya in-entry. Okay? So, for the next transaction, on January 4, Mr. X issued a promissory note to XYZ Bank for 100,000 pesos for business operations. So, Mr. X borrowed money from a bank. Okay? So, when we borrow money, a liability will increase. Okay? We're going to record it as a notes payable since we issued promissory note. So, we're going to write the date, the account titles affected in the business transaction. So, in this case, we debit cash, then we credit notes payable in the amount of 100,000 pesos. So, to record the borrowing of funds from the bank. Next transaction, on January 5, Mr. X acquired office equipment to be used for the office by paying 200,000 pesos cash. Class, in this transaction, there are two accounts affected, namely the office equipment, which is an asset account, and cash, which is also an asset account. So remember that assets have a debit normal balance. Okay? So if one of the assets or one of the company's assets will increase, we're going to debit such asset. But if it will increase, it will decrease in value, we're going to credit it. Okay? So again, debit. Naibak ko na naman. Ano ba naman? So again, asset. To show an increase in asset, we're going to debit. To show a decrease in asset, we're going to credit such asset. So in this case, we have we have two assets involved, namely the office equipment and the cash. So the office equipment, of course, when we acquire office equipment, there will be an increase in equipment in the company. Therefore, we're going to debit office equipment. And when we pay cash to the seller, of course, the cash level in our business or in our company will decrease in value. That's why we're going to credit cash. Okay? Don't forget the rules of debit and credit. So we're going to write first the date, January 5, 2017. We're going to we debit office equipment and we credit cash in the amount of 200,000 pesos. 200K. Class, take note that the posting reference are uh, being left blank. Okay? The purpose of posting references is when we post these transactions to their corresponding ledgers or T accounts, we're going to put or to write something in the PR column that will remind us that such transaction or transactions are already posted to the ledger. So normally we write the account numbers of each account title, which are normally or usually given in in a chart of accounts. So later on, I'm also going to teach you how to prepare a chart of accounts for the account titles that are being used in the recording process of the company's business transactions. So again, this is the entry: debit office equipment, credit cash 200,000. Then the explanation is to record the cash purchase of office equipment. Next transaction, on the same date, Mr.X acquired furniture and fixtures from Neswid costing 40,000 pesos by paying 12,000 and the balance at the end of the month. So make a compound entry for this since the account titles involved or the accounts involved in this transaction are three, namely the furniture and fixtures, which is an asset, 40,000 cash, sorry, 12,000 cash down payment, 'di ba? So, cash po 'yan, another asset, and then the balance at the end of the month, this will give rise to an accounts payable or to a liability. Okay. So, in analyzing this business transaction, when we acquire furniture and fixtures, an asset will increase in the form of furniture and fixtures. So, we need to debit furniture and fixtures. But since we're going to pay or to give a down payment to the seller in the amount of 12,000, therefore, we need to show a decrease in asset. And to show a decrease in asset, i-credit po natin siya in the form of cash, 'di ba? So cash will be credited in this transaction for this transaction. Then the balance since the furniture and fixtures cost 40,000 and we are only going to pay 12,000, so there are still a remaining balance of there's still a remaining balance of 28,000 which will be credited to a liability account. Okay, yung 28K. Class, take note. Nakakainis na. Take note that Wala tuloy yung sulat ko. That liabilities normally have a credit balance. So when we're going to record an increase in liability account, we are going to record such liability account. Okay, so in this case, we write the date. On the same date, ano ba daw ang date? So January 5. So we write January 5. Then we debit furniture and fixtures. I'm just going to write F&F. We record assets using their acquisition cost, which in this case is yung 40,000 pesos. Then another asset is involved, which is yung cash. But since cash, we're going to pay cash, meaning to say the cash level in our business will decrease, we're going to credit cash in the amount of 12,000. Then the balance, which is yung 28,000, that is 40,000 minus 12,000, will be credited to accounts payable, since the remaining balance will be paid at the end of the month according to the problem. Okay. Excuse me. Okay, so the explanation is to record the purchase of furniture and fixtures with a down payment and the balance on account. Okay? Excuse me. So for the next illustration, on January 6, Mr. X rented office space and paid 2 months rent in advance, all costing 18,000 pesos. So class, in this transaction, Mr. X paid 2 months rent, but take note, in advance. So this is an example of a prepayment. So, diba, we have already discussed the meaning of prepayment or the prepaid expenses as part of our assets, diba? So, when we made payments in advance, we initially record it as part of our asset in the form of prepaid rent or prepaid insurance or prepaid subscription, depending on the nature of the transaction, diba? So, in this case, since it is payment for rental of office space, so we record it as prepaid expense. Prepaid expense. So again, prepaid expense is an asset. That's why to show an increase in prepaid expense, we are going to debit prepaid expense account title. Bago ko malimutan ang date. Then, we're going to credit cash since we make cash payments, diba? Advance payment to the lessor. So, in this case, we debit prepaid rent, So, ito po ay prepaid rent. Then, we credit cash 18,000 pesos. Okay? So, ito yung sagot. So, the explanation is to record the advance payment for office space. Next transaction, on January 7, Mr. X paid Moonlife Insurance Company 10,800 for 1 year insurance of the gallery. So again, this is a prepayment, an advance payment for the insurance. So just like in our previous slide, we debit prepaid insurance. Again, prepaid insurance is an asset. And we credit cash for the amount of the payment that our company has made. Okay, so 10,000 pesos. So for the accounting explanation, to record the payment for a 1 year insurance. Anong nilagay ko na amount? 10,800 dapat yun. Nalimutan ko anong nilagay ko na amount. Anyways, next illustration. On the same date, Mr. X hired a part-time student helper with 4,000 monthly salary. The student helper started working on the following day. Class, in this transaction, take note that we only hire an employee. We just hired a part-time student helper. Then this such student helper or that student helper will start working on the following day pa. So, on the same date, which is January 5 nga ba? Kung ano man January yun. January 7. So, as of January 7, we will not prepare a journal entry for this. So, we ignore this. Or we're just going to write a memo entry stating that we hired a new part-time employee. Okay? But since, ma'am, diba it can be measured naman na kasi may 4,000 monthly. Class, since there are still no services rendered yet as of January 7, therefore, we don't have to record or such transaction do not have an impact or effect to our assets, liabilities, equity, income, or expenses na account titles. So, for this case, no entry pa siya kasi hindi pa naman siya nag-start mag-work, diba? On the following day pa. So, at the end of the month, dun tayo magre-record sa kanya ng salaries, expense. Okay? So, no entry. Again, on January 8, again, if in your business transaction, it's stated that the company just ordered an asset from a supplier without making any down payment or without making any payment to the supplier. So, even though the problem or the transaction states an amount which can be deceiving on your part, the transaction is still not measurable. Okay, or although it is measurable, but it doesn't have an impact yet to our assets, liabilities, equity, income, or expenses. 'Di ba? Pag nag-order ka, may nilabas ka na ba na cash? Wala pa po. May utang ka na ba? The moment na nag-order ka, wala pa rin po. So, that's why no entry pa siya dito. Next transaction. On January 9, the art supplies from local bookstore were delivered on account. Diba, on January 8, nag-order tayo kay local bookstore ng supplies worth 72,000. The following day siya dumating. So, in this case, magre-record na tayo kasi when the supplies that we have ordered arrived or were delivered to us, magkakaroon na tayo ng asset, diba? So, we debit art supplies, we credit accounts payable. Since class, we haven't made any payment yet as of this moment. So, pasok po muna niya sa liability, which is an accounts, which is in the form of accounts payable, 7,200. So, to record the purchase of art supplies on account. Another illustration. On January 11, an oil painting of Naruto and an acrylic painting of L was delivered to Mr. Kuto. Mr. X billed Mr. Kuto 120,000 pesos for the paintings delivered. Okay. So, class, even if the client has not made any payment yet, but the fact that Mr. X already rendered his service to Naruto and L, diba? And they have already delivered it to Mr. Kuto. Mr. X has already the right to record the revenue or income. So in this case, he must record a painting revenue account title. Kailangan niya nang ipasok as income kasi he has already delivered or rendered his services to Mr. Kuto. And since there are no cash payments made by Mr. Kuto yet, pasok muna po natin kay accounts receivable. So, we debit accounts receivable instead of cash since there is no cash payment made by Mr. Kuto yet. And we credit it to painting revenues, 120,000 pesos. Class, under accrual principle, we record income regardless of when we receive cash payments, diba? So, we record income if we have already rendered our services to our clients or to our customers, not when cash payment has been made. Okay. So, for the next example, on January 12, Mr. X paid local bookstore 3,000 of the amount owed. So, in this example, diba, we purchased supplies on account from the local bookstores in the amount of 3,000. In the amount of 7,200. So, on January 12, we're going to make a partial payment to the supplies that we have bought on account from local bookstore. And to record this transaction, a liability in the form of accounts payable will decrease, diba? Kasi magbabayad ka eh. And to record a decrease in liability, we're going to follow the reverse or the abnormal balance of liability. Again, class, what is the normal balance for a liability? Ma'am, credit po to show an increase. So, we're going to record, mamaya ko na. Naman! Nakakainis. Kita pa tuloy yung... Okay, class. Again, to record, nga lang ako sa baba. An accounts payable is a liability account. And a liability account has a normal balance of credit. So, to show an increase in a liability, we must credit such liability account. And to show a decrease, we must debit it. Okay? So, in this example or in this transaction, since this is a payment of a liability or this is a payment of an accounts payable transaction, diba? So, we're going to credit we're going to debit accounts payable. Since if we're going to pay accounts payable, our accounts payable account title will decrease. So, we need to credit accounts payable in the amount of, according to what we have or what we're going to pay to local bookstore. Then, debit nga pala. Debit accounts payable, 3,000. And class, an asset will be decreased in the form of cash since we're going to pay cash to our supplier or to the local bookstore. So, in this case, we're going to credit cash in the amount of 3,000. Take note that cash is classified as an asset. And an asset normally have a debit balance. So, any decrease in asset will be presented or will be recorded as credit, diba? So, in this case, naka-credit siya kasi mapapawasan siya. Okay? So, to record the partial payment made to local bookstore for the art supplies bought on account. Next transaction, on January 15, Mr. X received 50,000 from Mr. Kuto as partial payment for the anime painting delivered on January 11. So, diba, in the previous transaction or on January, on January 11, we record an account receivable from Mr. Kuto. We have already recorded our income in this transaction. So, what we are going to collect in the future will be a reduction in our receivable account. Then, if Mr. Kuto made payments or made cash payments, so it means that we're going to reduce the amount of the receivables that we have recorded on January 11. So, on the date of payment, which is January 15, Mr. Kuto made a partial payment of 50,000 pesos. So, we debit cash and we credit our accounts receivable since this is a collection of receivable transaction. So, the amount of 50,000 pesos. Okay. Yan. To record the collection of receivable from Mr. Kuto. Next example, on January 18, Mr. X withdrew 18,000 for personal use. Class, when the owner makes withdrawals or makes drawings of assets from the business, the asset will decrease, right? So when the investment of the owner decreased, we're going to record it, or when the owner makes a withdrawal from the business, we're going to use a separate account title namely the drawing account. Okay, so in this case, for example, X withdrawals or X drawings will be debited. So class, diba? Si capital po ay may normal balance na credit. So any increase in the capital or equity account will be presented or will be recorded as a credit. But class, take note that withdrawals tend to decrease or tend to reduce your capital account. Okay? So, meaning to say, withdrawals must have a debit as its normal balance. So, whenever we record drawings or withdrawals made by the owners, we're going to debit a withdrawal account. Okay? So, in this case, for example, X drawing or X withdrawal, same lang po yun. Depende doon sa pinapagamit ng problem. We debit X drawing for 18,000 and we credit cash 18,000. Ma'am, bakit po tayo nag-credit ng cash? Nag-credit tayo ng cash kasi kukunin siya ni Mr.X. Ilalabas siya ni Mr.X sa business. Therefore, we need to reduce the amount of cash that we have in the business. Okay, so in this case, we credit cash in the amount of the withdrawals made by Mr.X. Mr.X drawing, then credit cash 18,000. For the next illustration, on January 20, Mr. X received 80,000 pesos cash for a contract to paint Lily Cruz. Class, although Mr. X has already received 80,000 pesos cash from Lily Cruz, tatanungin mo yung sarili mo, nakapag-render na ba siya ng service kay Lily Cruz? If not, wag ka muna mag-record ng revenues. Kasi, yan ay i-record mo muna as liability. Okay? As an unearned income. Kasi you still need to render service. In this case, Mr. X is still going to render services to Miss Lily Cruz, diba? So, we're going to record the receipt of cash. So, magde-debit tayo ng cash done in the amount of 80,000. But still, since magre-render pa siya ng service, we're going to credit a liability account in the form of unearned service revenue. Unearned revenue na lang muna ilalagay ko. Tingnan natin sa next slide kung ano yung ginamit niya. Class, unearned revenue is a liability account. It means that Mr. X is liable to Lily Cruz in the form of service. Kasi tumanggap siya ng cash na 80,000, therefore, obliged siya to render service or painting services to Lily Cruz in the future. Okay? So, debit cash, credit unearned painting revenues in the amount of 80,000 pesos. When Mr. X starts to render service or services to Lily Cruz, that's the time that we're going to record revenues for Mr. X. Kasi diba, when do we render okay, mali. When are we going to consider income as earned? Diba? Kapag po nag-render na tayo ng service sa kanya, kapag nag-provide na tayo ng service. So, in the case where Mr. X will start to render services to Ms. Lily Cruz, that's the time when we are going to record revenues for Mr. X then. So, from our liability account, which is yung unearned painting revenues, we're going to debit unearned painting revenues and credit it directly to painting revenues kapag nakapag-provide na po ng service si Mr. X. Next illustration is, on January 23, Mr. X made a portrait of Mr. Julio Ardiente. Mr. Ardiente immediately paid him 90,000 for the painting. So, class, Mr. Ardiente paid Mr. X immediately. Nakukulang ng X. Okay. So, in this case, Mr. X, in the books of Mr. X, we need to debit cash and credit it to painting revenues. Ma'am, may revenue na. Oo, di ba nakagawa na siya ng portrait. And pagkagawa niya ng portrait, binayaran na rin siya kaagad ni Mr. Julio Ardiente. So, we need to debit cash in the amount of 90,000 and painting revenue 90,000. Okay. Yan. So, on January 25, Mr. X paid helper salary for the month. Diba, we hired a part-time student employee or helper. And we're at the end of the month, or on January 25, Mr. X made a salary payment to the student. Okay, so to record the payment of salaries, we need to debit salaries expense. Take note that that expenses have a normal debit balance, diba? Then we credit cash since we're going to pay 4,000 cash to the student or to the helper. Then debit salaries expense 4,000, credit cash 4,000. Okay. The next transaction, lapit na tayo matapos. On January 29, Mr. X paid water bill for 540 pesos for the month. Class, in recording payments for utility bills, we use an account title called Utilities Expense and Utilities Payable. If wala pa po tayong binabayad na pera, so sa utilities payable ang pasok. But since in this transaction, it is already stated that Mr. X has made a payment, so we are going to credit cash and we debit utilities expense in the amount of 540 pesos. Next transaction, or the last transaction for this presentation, on January 30, Mr. X received bill from Meralco amounting to 4,500. So again, utilities expense na po yan kasi we have already used the service provided by Meralco. We have already consumed the electricity, right, for this month. So we need to record utilities expense and credit utilities payable. Kasi class, wala namang sinabi sa problem na nagbayad na ng cash. In accounting, never assume unless otherwise stated, diba? So, debit tayo ng utilities expense 4,500, credit tayo ng utilities payable 4,500. Okay? So, yan. To record, hindi yan to record payment. To record the receipt of bill from Meralco amounting to 4,500. Okay. So, class, in case that there are some discussion or there are some part of the discussion which are difficult to understand, or up to now, hindi nyo pa din naintindihan, hindi pa rin clear. So, feel free to raise questions during our synchro classes para masagot ko kayo ng ayos. Okay. So, goodbye class. Thank you for listening.